So latest results of the RSS Global Construction Monitor have just been published. So this is a survey based on feedback from close to 3,500 members around the world. And the overall findings point to a modest improvement in headline construction activity in most parts of the world during the first quarter of this year. So this can be demonstrated by looking at the Construction Activity Index, which is a composite measure combining several of the key indicators captured in the survey into one summary statistic, and this picked up slightly at the global level during the first quarter of the year. In fact, the latest reading represents the strongest return in terms of the worldwide average picture since the beginning of 2022. So we break down the results by broad world region. This shows that the Middle East and Africa in aggregate continues to display the firmest momentum behind construction output growth compared to all other parts of the globe. And then within this, both Saudi Arabia and the United Arab Emirates stand out as markets really experiencing a solid rise in output right now. That's been the case for much of the past year, and the latest results show both nations continuing in much the same vein to start off 2023. Alongside this, Asia Pacific has seen quite a noteworthy improvement with respect to the headline index over the past couple of quarters, but the recovery appears especially evident in Q1. And this has been supported by relaxation of COVID restrictions across China, where sentiment within the construction industry has rebounded significantly of late, while other markets across the wider region, such as Singapore and India, are also seeing a strong expansion according to our Q1 survey feedback. Next up, the Americas saw a slight improvement in terms of the headline index this quarter, albeit I feel the bigger picture is that momentum at this point in time is quite a bit softer than back at the end of 2021 or early last year, even if overall output is continuing to rise modestly. And then looking into the details a bit further, the United States has seen a deceleration in construction activity growth in each of the last 4 quarters now, although trends do remain slightly positive nonetheless. And then lastly, Europe is the only region in which the headline index here sits in negative territory, only marginally so, but in general, the backdrop for construction in Europe is lagging other parts of the world. Germany, for instance, is reportedly seeing a decline in construction workloads, which obviously has a significant impact on the aggregate readings for the continent. For the UK, the picture is slightly stronger than for Europe as a whole, having recovered from a more negative view last quarter, but even so, output trends or momentum behind output growth appears relatively subdued overall across the UK, which is a theme generally running through many of the larger European markets. Moving on now to look at different sectors and how they're expected to perform over the next 12 months. The bars on the graph represent the latest net balances for respondents' expectations across the various categories covered here, and a message coming through or continuing to come through very clearly in the latest results is that infrastructure is anticipated to see the strongest expansion in activity compared to all other sectors. That's the case across all world regions. I think this outperformance, if you like, is perhaps most apparent in Asia Pacific and the Americas, while in the Middle East and Africa, there's a more well-rounded set of expectations, albeit infrastructure still displays the strongest net balance, but by a much smaller margin than in other world regions. I think this comparison here also adds further evidence to the idea that Europe is trailing in terms of momentum. So infrastructure activity is anticipated to rise in Europe, but you can see expectations are not as elevated as in other parts of the world. And then alongside this, private residential construction activity is now seen stagnating across Europe over the next 12 months, while the outlook is also pretty flat for private non-residential or private commercial across the continent. But elsewhere, expectations are positive to a greater or less degree across all categories, even if these projections are relatively modest for private sector construction work, particularly across the Americas. So final takeaway from the latest results that I'd like to point out is around the various factors that are seen as impeding the construction market currently. Of course, it's not a surprise given the pace of inflation over the past year, but material costs are the most widely cited issue thought to be constraining activity. Now, without placing too much emphasis on this, there are kind of early or tentative signs that material cost pressures are easing to some degree, although we still have 3/4 of our global respondents that say high material costs are an issue for them. This is down from 91% a year ago, and that share has eased in each of the last 4 quarters now. If you look at forecasts for material cost inflation taken from the survey regarding the year ahead, these have been trimmed from a peak of around 9% last year to roughly 6% in Q1. Although that is still pretty elevated, the picture does seem to be turning slowly. Now, away from material costs, now general financial constraints are the next most widely referenced factor seen as holding back the market. And given the recent and continued or ongoing tightening in monetary policy in many parts of the world, I think the lending environment within construction it is unlikely to turn much more favourable in the immediate future, and so that is set to weigh on the market, it seems, further down the line. And then lastly, skills and labour shortages are still seen as significant impediments when it comes to growth in construction output at the global level. Around 2/3 of our respondent base worldwide report that they are encountering problems with regards to access to skills and general labour, and that is hampering growth. And as it happens, employment expectations across the industry are positive for the coming 12 months, but how successful firms will end up being in recruiting the skills and labour needed does remain a question mark on account of the shortages that are being experienced currently. Again, this is a longer term issue that seems unlikely to be resolved to any great extent over the near term and will therefore continue to weigh on the market in the immediate future. But despite those challenges, the overall results from this survey round, as I say, do point to construction output rising in most world regions in the year ahead, with infrastructure leading the way. The scale of the expansion, however, may be limited by some of the concerns outlined here, even if the general tone to the data, for now at least, points to quite a resilient trend in construction activity.